From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Friday, the 20th of September. Hard to believe we've only got 1 week left in terms of trading for this month. And what a day. We started out on a very strong high, pushing to around 82.50 on the ASX 200. But you have started to see the likes of Rio Tinto and Macquarie sell off in the afternoon. So looking like we are going to have a very flat finish. And in fact, that is our key theme of the day today, a flat finish as we really just continue to play into what we've been seeing in overall market momentum. It was, as I mentioned, a very solid start to the day's trade. I'm just looking at price action around 10, 11 a.m. looking very, very solid. A little bit wobbly around 12 till 2, and then we've sold off heading into the close. A couple of factors we've been watching what's been happening in Asia, of course, with decisions on the LPR from China, the BOJ holding flat as well. And we're just looking ahead to what we might see coming through from Wall Street tonight. Now that the Fed is done, that optimism in terms of the big moves you saw on Wall Street overnight very much priced in. And we're looking ahead now to the next, I guess, litmus test, or catalyst, should I say, for investors. For us, that's going to be the RBA. I'll get to that in a moment. But first, let's just drill down into Myer, because the Myer misery very much was a theme today as well. Look, it came through saying what we've heard from a lot of retailers, these challenging economic environment really impacting. We saw total sales down about 3% to $3.2 billion on the year, a 26% drop in full year profit to $52.6 million. And Executive Chair Olivia Wirth just saying that this really reflects the challenging macroeconomic environment that you're seeing overall for the retailers. We know that we are kind of sitting on our hands with regards to spending, and that all flows through into what the RBA is going to do next week. Of course, another volatile jobs number that they have to deal with that came through yesterday, but don't expect that the RBA is going to follow the Fed, nor does it need to. We are very much expecting that the RBA is going to hike rates. We'll be at the press conference next Tuesday, and potentially Michelle Bullock might even say what she said a couple of times since the RBA last met, and that is that they have considered hiking given the stubborn inflation print. And Deanna Messina from AMP, she's writing in our View this afternoon in our newsletter. She wrote a really interesting piece about the fact that everybody is saying just because the Fed cut, just because you're seeing the BOE, the Bank of England, the ECB cut, that the RBA should too. And she says, hang on, let's look back in history. Central banks don't always follow each other, and we have to remember we're in a very different part of the economic cycle. Let's get back to the market and have a look at some of the sectors, particularly in the wake of what we heard from Myer, but also Harvey Norman being hit with a second class action lawsuit. It looks like investors have shrugged this off. Harvey Norman ended higher today. When it comes to the banks, I mentioned Macquarie taking a negative turn. You also had UBS upgrading Westpac, I believe, today. Do we have the banks? No, we don't. All right, we'll just move straight on in to some of the top corporate stories that we were following today. And of course, we watched on Myer pairing some of those losses following a slump in profit and sales in the 2024 financial year. At one point, Myer was down 9%, closing lower by just 1%. Harvey Norman, I mentioned, shrugging off these concerns about a second class action. Regis Healthcare also in focus there. Plans to buy 2 aged care homes for $35.5 million. Namoy Cotton finishing at 72 cents. It's recommended Singapore Olam Agri's fair and reasonable, they say, takeover bid at 75 cents. And the transport operator Kelsian rising. It won a $39 million one-year contract to operate the statewide motor coach transit networks in the US state of Colorado. Let's get more on today's market action, and welcome to the COB, Grady Wolf from Bell Direct. Grady, a lot to unpack in the retail space when you hear those challenging conditions again from Myer, and then, as I mentioned, Harvey Norman getting another class action slapped against it.
Yeah, it's been a pretty tough time for the retailers, and it's a really interesting note to pick up because Myer has come in with that downgrade today, and obviously the results that were pretty poor today, and then obviously Harvey Norman 2 class actions, but it wasn't a tale across the board for FY24 results, and some retailers really proved that they're resilient and they can weather any economic storm. Accent Group for one, JB Hi-Fi another, Baby Bunting, Temple and Webster, these names rang a bell today when I was thinking about which ones remained resilient. So I think it's not across the board that it's a tough time, but I think heading into FY25, into the latter half of the first half and into the second half, it's going to be tough. But some of them, like JB Hi-Fi, Accent Group, they started with really strong results for the first 7 trading weeks of FY25. So I think, again, it's not across the board, but it is. It's definitely being felt for Myer, for obviously Harvey Norman with these class actions. No one wants to see a class action. So, yeah, it's tough times as it is, and Harvey Norman's got the double whammy happening with this legal side as well.
Indeed. All right, well, one stock that did really well, Grady, was Telix Pharmaceuticals. What are you looking at there?
Yeah, Telix has been on my list for a very long time and I haven't bought in, and I think for me it's without one that I've missed the boat and I keep looking at it going, I didn't buy in. But Telix is amazing because they've got the Illuccix product, which is their prostate cancer imaging agent. It's already making them money, so they're not looking to shareholders for any money anytime soon. They're on that commercialization path. But they've got the second product now that's in FDA hands for approval, the Zircaix, which is their kidney imaging agent therapy. It's their kidney imaging agent, which is their device. It's kind of in your bloodstream to show where their cancer is in kidneys. So that's now with the FDA for approval, but they just announced that they've got a commercial partner now to distribute this throughout America, throughout the world. So that's really good that they've announced that. It's Cardinal Health is the partner, the distribution partner. So once you have them on board, you know it's going to run because the company is just awaiting FDA approval. I think they had a bit of a slowdown recently with the FDA approval. Something came out, but nothing too material, and that still should be expected by FY25 and commercialization after that. So once they do get that FDA approval, they can then start generating money from distribution and commercialization of this kidney cancer imaging agent, which then combines with the prostate cancer imaging agent. They have one for brain in the works. They have therapy drugs in the works. Telix is the company that really can do no wrong in my eyes right now.
All right, you heard it here first from Grady. Let's talk about the oil market as well and what all of this means for energy players here. So we had the Fed cut, obviously, and that saw Brent recover somewhat, but we're also still watching very closely what's happening in the Middle East. How are you seeing all of this play out?
Yeah, there's a lot of play here, unfortunately, for our energy producers or oil producers out there. And it's really going to be a tough economic time for them to face in FY25 because there is so much volatility and uncertainty. Think Karoon Energy, Beach Energy. These companies are going to find it really hard to even forecast their growth and earnings unless they're hedged to the oil price or they have hedge books and derivatives in place to lock in a certain sale price, because we are just seeing so much bounce around in the price of oil right now simply because of so many drivers. As you said, we have geopolitical tensions right now in the Middle East that are escalating. And the Middle East is the top producer in the world of oil. So that's really weighing on supply there. But then we have demand issues out of China because their recovery post-pandemic is so slow. And they're the world's second largest importer of oil. And they've also come out this week saying they're turning to renewables instead of oil. So that's really weighed on the demand side of oil this week. And that's impacted the price. But then we also have the Fed cut and we have just so much at play here. So I think for now, at the moment, petrol prices should stay low for a little bit longer, but with escalating tensions in the Middle East and the Russia-Ukraine war looking not to end anytime soon, it's really a merry-go-round or a roller coaster of what's happening on the price of oil. And while petrol prices are low, I suggest all viewers go and fill up.
Yes, that is a good tip. My car is running on empty. What was also interesting today, though, was, all this speculation of more stimulus when you talk about China and iron ore future prices strengthening in Singapore. What are you looking at when you look at some of the big miners like BHP, Rio, which fell today, and Fortescue? Because a lot of people saying, look, perhaps some of this weakness is already priced into the big falls that they've had.
I think BHP is a beast of its own. I've seen TV ads now about BHP's full shift to copper. So I think they're definitely trying to play the copper card there. But I think for the other big iron ore miners, it is, again, kind of like oil producers, a really tough time because you can't predict earnings. You can't predict how much China's going to need until that material stimulus comes through. And they are up and down constantly about, we're going to put this material stimulus in. No, we're not. Yes, we are. So that's really weighing on iron ore futures prices. I do see FY25 2025 being another tough year for our big miners with subdued prices in the iron ore front. We're not seeing the elevated prices anymore, so I think prices will remain subdued for a little while to come, and that naturally is looking likely to hit first half results, if not full year results for FY25 for our big miners. So diversification is key, and it's what we're seeing in BHP right now.
All right, Grady, as we've been talking, it looks like some buyers have moved in, because I mentioned that we had a flat finish, it looked like at 4, but now it looks like we're going to close above 8,200 points on the ASX 200. So another record high. Is this sort of just where we're going to trade until we start talking about Santa Claus rally? Are we just going to keep seeing these resistance levels and we buy and then we sell, or how are you seeing things?
I definitely think there's a lot of tailwinds to keep pushing the market. There's no real need. Everyone says there's this correction coming, and it's like, I don't think there has to be a correction coming, because there's fundamentals there to support the rally that is continued. So we're seeing resilience in earnings, we're seeing rate cuts on the horizon, we're seeing demand increasing, seeing economic stability. So there is just a lot at play that's driving the market right now and fueling these tailwinds for the fundamentals to keep above that 8,200 point mark. So I don't see a pullback anytime soon. We might see, but the thing to note about this market right now is it's not a broad rally across the board. Material stocks are still coming under pressure. Retailers, as we saw today, healthcare stocks are trading lower than they normally and traditionally are on a 10-year basis. So it's not a broad rally, it's a very specified rally in the AI tech sector that's driving the market, and REITs are coming back as well. But it's really important to see that there is definitely opportunities in the market. We're definitely seeing a lot of opportunity in the small to mid-cap space, but I don't see a need for a pullback anytime soon. I think we might hover around these low days, high days again, and obviously based on economic data moving forward. And I think the Fed's rate cut outlook will definitely be driven by the economic data that continues to come out, because half of the data in the US is all favourable toward economic stability and the need to keep continuing cutting rates because inflation's coming down. But the other half of the data is really suggesting that, there is a recessionary pressure that is kind of lingering on the outside and could tip the US into a recession. So we just don't know what's going on there.
We don't indeed. All right, Grady, always appreciate your insights. Have a fabulous weekend. Grady Wolf there.
Have a good weekend. Thanks for having me.
Thank you, Grady Wolf from Bell Direct. All right, the stock of the day on the call was Myer. We had Adam Dawes from Shaw & Partners and Jonathan Takadina from MPC Markets join Andrew with their views.
Overall, the consumer has been in a fragile state. There's no doubt about that. We know that the consumer is in fragile. However, some of the other discretionary retailers, JB Hi-Fi, fantastic numbers and just continuing to keep moving higher. Whereas Myer is a bit more of that old world side of things. They're trying to rebrand, bring in some more things to the stores. But do people go into department stores these days?
I don't know how they meld that model into this online retail space. And you can see just some of the bigger names in the US, they've all been shutting down, and like everyone's just shopping in a different way at this stage. So I don't think Myer's kept up to date there. I think it's too hard to shift that. They've got all this premium real estate that they're paying high rents for, and people just aren't going in, and you're not getting the foot traffic like before.
All right, well, it does look like we did close at a record. Just got over that 8,200 point level on the ASX 200. Let's have a look at the leaders today. Telix Pharmaceuticals, Grady had some great insights on that company, up 7.5%. Tabcorp, now this was also interesting. It was quite an eventful day. Brett Chenoweth appointed as new chair following the resignation of former chair Bruce Akhurst. Neuron Pharmaceuticals also looking good, Core Lithium and Domino's to the downside today on the market. When we have a look at the laggards, no, we're not going to have a look at the laggards. We're just going to tease you and pretend we look at the laggards. You know what I'm going to do? I'm going to tell you what they are. They were deep yellow, so we saw weakness coming through in some of these uranium players. Paladin as well, IGO, Boss Energy, and Lifestyle Communities. All right, let's have a look at what we are expecting tonight. And of course, now we can have a look at the small cap leaders. Let's have a look at what we're going to see tonight. ECB President Lagarde speaking, and also a speech from the FOMC member Harker. We've also got, of course, a lot of focus on what we're going to have next week, which is going to be that key core PCE data coming out of the US. And in terms of what we're looking for next week locally, it's going to be all about the RBA, that interest rate decision. I'll be there at the press conference. If you've got any hot tips of what I can ask Michelle Bullock, send them our way, news@ausbiz.com.au. I've got to tell you, it gets really hard when you have to continue trying to ask the same question multiple different ways, because there's about 20 journalists in that room. PMIs for September as well, monthly consumer price index for August, job vacancies for August, and the RBA's financial stability review. Quick final check of where the market is. And of course, we have the global week ahead as well with the PCE that I mentioned, Fed Chair Jay Powell also speaking, US home prices, China industrial profits. And a quick look at where the market is. We are at a fresh record on the ASX 200. Not entirely sure where the CBO 200 is, but we are at 8,209, I believe, on the ASX 200. So a gain of 0.2%. We mentioned Tabcorp and Telix really leading the gains there. So we will take that, ending the week on a high. That does it for this COB and for the week. We'll be back from 9:45 a.m. Eastern. We'll see you then on Monday.